Welcome and thank you for joining us. It's been a while since we've done an investment update. Joining me today is Michael Wyrsch, our Chief Investment Officer and Deputy CEO. Michael, the information we'll cover today is of a general nature and won't consider people's personal circumstances. We do have teams that can help you with that if you'd like. But Michael, obviously a fair bit happening globally at the moment. Fair bit of market volatility and different impacts to the investment market. Any key thoughts?
Well, again, if you look at markets, they initially sold off with the attack on Iran, but then they've bounced back. So one of them key learnings out of all this is there's a lot going on in the world. It's not all about the Strait of Hormuz and this conflict. We've seen markets bounce back strongly. AI has been a very strong theme in that there's a lot of money being poured into AI. And the US economy in particular is a huge economy, a lot going on. Look, the war itself is obviously not a positive, and the longer it goes, the greater the potential damage being done. But it's certainly not the only thing going on. And, again, looking at the long term, staying invested is pretty important.
So, Michael, there's 2 points there I'm interested in asking you a little bit more about. AI, I've spoken to the team and spoken to them about the war, and they keep coming back to AI. So impacts of AI, what are we seeing in the...
We're seeing just an incredible amount of investment, particularly by the big technology companies into AI. They see it. Funnily enough, it's an existential risk to them. So they very much feel they must invest or they may not survive. So there's a lot of money going into computing power, into AI models. They're getting updated all the time. One company will update their model and it'll be the best. And then a few weeks or months later, something else will come out that's better again. So from someone else. So this is an incredible change in the market and incredible amount of investment from companies that used to be very much cash generative. They're now pouring all that cash into investing.
So, Michael, one clearly to watch. And the war, we've experienced that here in Australia. We're seeing inflation increase, perhaps largely on the back of fuel prices. Any commentary on inflation and fuel prices?
Look, I think it'll be here for a while, and because it's gone on for so long already, we're starting to see people having to close off oil fields because their storage is full. There's also, we are seeing substitution. We're seeing others ramp up supply where they can. So there is, over time, this will resolve one way or another. And perhaps it's spurring on investment that should have occurred much earlier than it has, particularly in Australia. So, there's no good news in the short term, I don't think, but in the medium term, I think we'll see less dependence and hopefully better energy security from places like Australia, which after all is a net energy exporter and should be, but isn't well positioned at the moment.
Thank you, Michael. For those people listening, we'll do a bit more of this going forward. We've also introduced a series of webinars across different topics. Michael and the team presented an investment update, or Tim within Michael's team presented an investment update only a few weeks ago. So keep an eye out for our webinars and the return of regular updates in our quarterly newsletter. So, Michael, thank you again and look forward to speaking to everyone shortly.
Thank you, everyone.